See, Anish, I've been bearish on IT and I've been wrong. I must admit it. For me, growth is still very patchy. And, for a sector which is growing at about 7-8%, at max you can say 10%, I think the P multiples are stretched. What has done the trick for some of these, large IT companies is that they are doing buybacks, and then that in a sense is helping them in terms of their capital allocation policy. But specifically, since we are talking about Wipro, which has done much better than Nifty this year, even though their growth has not been very impressive, you would ask yourself why. And the why, I think, comes from the fact that A, there is a change in capital allocation policy. B, there seems to be belief that the change of guard finally at Wipro seems to be working. Nobody is really noticing it and talking about it, but there is, yes sir, there has been a change of guard at Wipro top level, and that in a sense now seems to be the real driving factor for where Wipro's future business and capital allocation policy is likely to move. I think it's early days to assume that Wipro is out of the muddy waters, but surely you can say that where they were struggling to even stay afloat, now they clearly are looking at progressing in the right direction. But large part of the appreciation, I think, this year for a company like Wipro purely has been a function of the capital allocation policy and the buyback. The option value here is the change of guard and what they can really do. And then if they're really able to pivot or get some business going, at least in the AI space. So there are a lot of moving parts for Wipro right now to make a case that a business or a sector which is growing in single digit to command this kind of an P multiple for an extended period of time when other sectors are likely to make a comeback next year, hopefully because of the base effect, in my book could be stretched. But I'll put that caveat again. I've been bearish on IT and I've been wrong. So I'm not just the best judge.